So what's up, troops? It's George again. And in this video, I wanted to talk about the stupidly easy way that you can double, if not more, your trading profits, literally within the drop of a hat. And I wanted to create this video because I see a lot of information in regards to sort of scaling your profits and stuff like this. And honestly, I mean, as simple as it sounds, well, you'll get to know that in just a second, but I've never really seen anybody talking about doing things this way. So in this video, I'm going to show you and explain to you how I personally increase my profits on my positions. Now, I guess we kind of need to start with the problem. When an individual is trying to scale their trading, I mean, I've worked with a lot of traders, so I've heard this a lot. Often what we'll see is they will try to implement more strategies. They'll try and trade more pairs. They'll try and find different trades. They'll look at different markets. They might increase their overall risk. And really the problem there lies in, of course, if you're doing things right. I mean, if you're trading with an edge and then you start to implement different strategies, different pairs, different markets, then as soon as you do that, you lose that edge. You lose that edge in the market, and very quickly you become a gambler, right? You lose the edge entirely. So let me explain. Let me sort of show you what I mean by that. So let's say, for example, that this is your sort of general trading model, right? This is kind of what your strategy and your edge is kind of concluded in the market. So we'd be looking for trades that when we see X happen, we're looking to enter here and we're looking to come out of the trade there. So that is our trading model, okay? This happens at a certain time of the day. We know when to look for it. We know exactly where our stop loss goes, where our take profit goes. And we know that if we follow our mechanical rules to find this trade, that we have got a long-term edge in the market. Now, often what we then see happen is, I mean, if somebody's trying to maybe scale their profits, they want to find more trades, they might be looking to try and pass a challenge and they want to take more of an aggressive approach to the market, which again isn't always necessary, but sometimes it's something that the individual wants to do. What they'll do is, instead of focusing on where their edge is present, they'll look for different style of trades, right? They might then start to trade and try and find some sort of move where they're just trying to follow market structure. They're trying to try and find some sort of random reversal trades in the market. And as soon as you do that, as soon as you step away from the model that you know presents you an edge and concludes that there is an edge in the market for you, as soon as you do that, you lose the edge and you instantly become a gambler. Again, I mean, the problem here is kind of obvious, right? If you've got a system that you have tested, you have tried, you have collected the data on, that you know that if you follow this over, again, 100 trades, that you will see positive results. The second you step away from that guarantee of profitability is gone, right? So the way in which I do things, and I tell all of my students to do this as well, is by using a scaling in technique. I mean, we've all heard the saying of cutting your losses early and adding size to your winners. And I think a lot of people forget about that. I mean, listen, I'm not a big believer in cutting trades early, but adding size to your winners, 100%. So let me go back to this and again sort of use this example here as a bit of an explanation. So again, let's say this is our trading model, okay? We get our entry down here, okay, and we're expecting the market to go up here. Now, instead of me just taking that trade on its own, okay, if I'm in the position where I would like to scale in or I see an opportunity to scale in, I'm not just going to try and find more trades. I am going to maximize this position. Because if I know that the probabilities are that once this happens, we're going to target this region, then I instantly know that there is a higher probability to continue to follow that move. So instead of just waiting for another trade, I will use the lower time frames within this move here. Because again, we have to understand that the market's a fractal. So what happens on the higher time frame also happens on the lower time frames a number of times over. So within here on the lower time frame, you will see, for example, something like this, where on the way up, you will see market structure looking like this. Okay, so you will see something like this happening inside this. Okay, so instead of me just sitting back and sort of just taking that one position. Okay, it might look a little bit like this. Okay, taking a trade like this, and then again looking to have a typical take profit region, which would be sort of up in that sort of region. Instead of just sitting back and sort of just leaving it to that, I will then run with the expectation that we are going to go towards TP and look to scale into that trade on the lower time frames. So I will, for example, I will look for positions where, again, we might see some sort of confirmation with to follow order flow sort of internally. We might see, I don't know, price might come back down here. There might be another run on liquidity from sort of minor structure here. We then might see another confirmation model in here, and then I'll look to scale into the position, okay, and sort of take something like that within this region. Again, all the while following price into that original target. Okay, so instead of me trying to build more strategies, trying to add more pairs, and just really removing my focus from what I know works, I will identify the trades that will work. Okay, and I'll identify and follow the trades with my mechanical rules that I know provide me with an edge. And once I'm in that initial position, I'll remove the risk as soon as I can, and then I will look to add size to that trade. Okay, because we know that the probability of us going from this point to this point is fairly likely, right? That's what our edge is concluding for us. So if that is present, then we know that if we can follow the lower time frames into that region, we can add significant size to our trades. So again, I mean, in this instance here, let's say, for example, let's just remove some of this. Let's get rid of this here. It's going to allow me to do it. Okay, so let's get rid of this here. So let's just do an example here. I'll do a proper drawing. So let's say, for example, I don't know, we do something like this. Okay, we have another sort of lower time frame confirmation. Okay, we have maybe another run on liquidity. Again, anybody that knows me, I'm a big advocate for focusing a lot on liquidity. Okay, what we then might see, we might then see a sort of a confirmation model in here. So we then see structure then realign with that overall bullish move. And then instead of me just having this one position, which I've already got my risk off of, I might then add, for example, another trade in here. Okay, and then again, we'll have the sort of similar target. Okay, something along the lines of this. So let's say, for example, this was the sort of overall trade that I'm looking to take. This is what my mechanical rules lead me to. I'll take that original trade as I would normally. And then if I do need to take a more aggressive approach to the market, I will follow that lower time frame structure, order flow, whatever it is, just following price to the upside as it goes towards my target. And I will look for other higher probability opportunities that still align with my rules to add size to this move. So let's say, for example, here we take a 4.29 risk to reward trade on the initial move, and then we might add another scaling position, which adds us another basically near on 5% on that position. So all of a sudden, we've doubled, if not more, that one trade that we've taken simply by following the direction of the market that we know we're ultimately going to be going in anyway. So again, just to conclude there, again, just in case people aren't sort of following, but the problem that we often see, right? The problem that we often see is in order for people to scratch the itch to make more money, what they're going to do is they're going to try and build more strategies, they're going to trade more pairs, they're going to spend more time in the markets. And from experience, that's not the way to do things, right? You instantly lose that edge in the market, you instantly become a gambler. And yeah, I mean, the things just never end up going well that way. But if you run with the mindset of, I'm looking for the right trades, I'm following the same positions, but then what I'm going to do is I'm going to scale into them, you're going to find far more success because you're still trading within that model that you know presents you an edge. Now, again, just for a bit of clarity, really, I mean, you're not going to need this a lot, right? I mean, I'm a very laid back trader. I don't scale into a lot of positions, but there is definitely use cases. I mean, for example, if you are looking to get a funded account, okay, and you want to get that challenge passed, you might take a more aggressive approach to, again, get those targets hit. Again, you might just naturally be a more aggressive trader. You want to maximize the profits you're going to take. Obviously, you're going to be taking on more risk with this, and you have to be aware of that. But as long as you can align yourself with your overall edge, then you're definitely going to be able to see more profits, for sure. And again, just to again, I'm thinking through here, right? I'm giving scenarios that I would use this in. But then you also have to understand, right, on the flip side, this is not something that I would personally do a lot of the time, purely for the fact that if you are trading with 2, 3, 4, 5, 600,000 worth of capital, you don't need to be making, I mean, in this case here, the trade I've got in front of me, I mean, you can't see it now, but let's say around 9%, let's say, you don't need to be making 9% from a single trade. I mean, if you go and pull out 3%, 5%, you're going to make a significant amount of money. But yeah, anyway, I wanted to make the video just to clarify my standpoint and sort of where I think that people should be scaling in and how they should be doing things and sort of approaching the markets in a slightly different way. And again, all of this comes from having a statistical edge already. I mean, if you don't have a strategy, a model that gives you an edge in the markets, I mean, there's no point adding size to that because you're just making yourself more of a gambler, right? You're just adding more risk to a trade that probably isn't going to work out in the first place, right? So from the get-go, if you don't have a statistical edge in the market with clear mechanical rules to follow to help you identify those trades, I mean, you're already missing out on the first step. But if you do have that, and you are in the position where you have clarity as to where the market's likely to go, and you understand where your edge is presented, then if you are in the position where you do want to scale, you do want to add size, you do want to maximize your winners, then this is 100% the way that I would do it. I mean, like, go through the examples. I mean, you might be able to add 1 or even 2 positions to that same move, depending on what obviously comes about. But this will allow you to instantly be able to double, if not more, the profits that you make on some of your trades without having to build more strategies, trade more pairs, spend more time on the markets. So it really is a pretty much a plug and play method to really get the most out of your positions. So I hope you found some value from this. Again, just a short video. Again, as always, if you have questions in regards to this, then just stick a comment in the bottom of this video. Don't forget to subscribe. We're going to have weekly videos coming from now on. But yeah, let me know what your thoughts are. As always, any questions, just leave them below. Make sure you subscribe, and I will see you in the next video.